Hello, YouTube people. Welcome to the Coach's Playbook. Today's June 15th, 2021. Joined by Hogue, Mick, Dan, and Carol. Carol, thanks for stopping by again. Always great to have you in here every couple of
Sure.
weeks. It makes my month twice, pretty much. Bi-weekly, it makes my bi-weekly, it makes me happy. So anyway, yeah. So today we're going to talk about the big FOMC stuff coming out tomorrow. And there's a lot to talk about there. But first, I thought, Mick, you kick us off with somebody who traded well ahead of the FOMC. What do you got for us?
Big shout out to Matthew Wyman, up about a little over $2,000 today, trading the NASDAQ. Seems like all we're talking about is people trading the NASDAQ, making money when we do these little shout outs. So hats off to you, Matt.
Yeah, hats off, Matt. I suppose it makes sense. You know, the NASDAQ is volatile. It's a fun future to trade. What percent of our, Mick, how many people are trading the NASDAQ versus everything else?
NASDAQ's probably between NASDAQ and S&Ps. I'd say that accounts for 95% of our volume in the funded accounts. NASDAQ's definitely the larger majority of that 95% between the two.
Jeez, man, computers, they're the future. So anyway, tomorrow we're going to hear from Jerome Powell and the gang. And there's going to be a lot riding on this release and the language that they use, because people everywhere are, as we mentioned last week and the week before, hungry for new information. We're hungry for those dot plots. So who wants to get us started today? And I'll kind of set the tone on what to expect as far as tapering, future possible rate hikes, stuff like that. I thought maybe we could start with Hogue today, since you've been around a bit.
Sure. I believe, check me if I'm wrong, the expectation is there's going to be no changes, correct? They're going to try and hold the policy as is. As we all are well aware, it's not necessarily the change itself, it's the vocabulary in and around what they talk about. I think the release tomorrow is probably going to be somewhat of a non-event. Of course, we're going to see some knee-jerking. More important is going to be the Fed chair presser at 1:30 Central tomorrow. This has always been such on the trading floor, it was always an intense day, an intense period of time when, they'd come out with what their expectations were. There was, a lot of high expectations for potential big profits, and we on the trading floor tended not to think about the potential big losses. I don't hold positions into this. Daytime frame positions into these releases anymore. I've had some, wildly successful days and some really horrible trading days. A lot of the gray hairs on this head have come from trading into these things, and I don't play them in daytime frame anymore,
including the ones that have fallen out.
Yeah, so other than the ones that have fallen out, they actually jumped out because these I'm not an economist, so I can't sit in here and try and predict and think about where markets are going to go, what direction they're going to go, no matter what the release is. It's more of a slow digestion for me. And then if I find opportunities, as the dust settles, then I'll get back in. But, as far as holding positions into them, I gave that up a long time ago. I think when I told out wins and losses and on FOMC days, I came out about even. So instead of playing and losing more hair, I'm going to watch and respond as the dust settles.
Yeah, come out even, take 5 years off your life. It's not a good trade.
Yeah.
And Hogue's a big guy about, managing your risk as your first job. You take something through the Fed number. I mean, nothing is immediately going to change tomorrow, but let's say it did. There's going to be fireworks where whatever loss you think you might take, multiply that by some order of magnitude, and that could be where you get set. So tomorrow, what people are looking for is whether they'll bring in, I think when last we left the Fed, sounds like a soap opera, they were talking about raising rates in 2024, and there's a lot of chatter they're going to bring that closer into 2023, sort of like the big thing they'll be looking at, along with how much they'll taper. They're doing 120 billion a month in treasuries and
insane.
Mortgage-backed securities. Well, Carol, sounds like you have some feelings on it. What are you thinking about tomorrow?
I think everything you've said is pretty spot on. It is just becoming outrageous, the amount of mortgage-backed securities and whatnot that the Fed is getting involved in. And I think last week on Friday, the 10-year yield went back down to 1.4. And you look at that and you look at the inflation and what the Fed may be doing down the road, and it just doesn't even seem to make sense anymore. Like, you can't really, it's hard to plan a strategy around what they may or may not do and what words they might speak after they do nothing or whatever it is they're going to decide to do. How the market interprets it nowadays, it's just way too risky to participate in. I think you definitely want to just stand back and let the dust settle and see how the market is going to absorb what's going to happen.
I don't see a whole lot of upside long term and buying a 10-year bond that's yielding 1.4%. That being said, that's what the price is right now. So I guess that's what people are thinking. So as people out there might know, the Fed has a dual mandate, right? They're to promote price stability and employment. I believe that that's a newer part of their mandate. And one of the big questions, which, I'll throw it over to Mick yet, and you can talk about the PPI or whatever. So we have the inflation story and we have the employment story. And I think the real question is whether there's going to be structural changes in that, how many people who dropped out of the marketplace for labor are going to come back in, for instance. Has sort of the time we spent working from home and stuff like that kind of changed the way people, it has for me, probably has for everyone else here too, to some extent. That's just my musings, but Mick, what are you feeling?
Well, I don't have a whole heck of a lot to say about the FOMC tomorrow and what comes after that. Like John said, I'm not an economist. I don't like placing bets ahead of these things. I'm more of a reactive trader when it comes to that kind of thing. I like seeing the dust settle. Bringing up inflation, we had the PPI come out this morning. So we've seen, out of the last 5 months they released this, 4 of the last 5 have been increases on, the producer side of things, which just gets passed along to the consumers. And, I think we've seen, this in commodities as well as other things. I'm working on a home remodel, and I sure am feeling it, and it's very frustrating. Seeing, I just had to order 5 new windows, and the original price that they were all set at, well, I just bit the bullet and paid literally double for those same windows. It's tough to find things. And all these PPI numbers are coming out well over what they were forecasting for them. So, it's something I don't like to see. But I don't have a lot to share, as far as the FOMC and the Fed goes, because like I said, I'm not an economist. I just like reacting to those things. And I think I have the same batting average as Hogue when it comes to, holding trades into economic releases. I think I got lucky sometimes. I think I did something stupid and got lucky before. But overall, there's nothing worse to me than, wasting hard-earned money when, you're flipping a coin, trying to predict what other people are going to do and say.
Yeah.
Mick, do you dye your hair?
No.
Oh.
Just now I'm curious. So are you just curious about his hair? Or?
Well, yeah, because I got a lot more gray. I know I'm older, but he's had some of the same stresses.
I think you've gone through a lot more releases than me. And it was actually, that was kind of a thing I learned pretty early on. Because I got, I think like any trader, they hate giving back money. And when you have, a couple good weeks of profits and then, all it takes is a 10-minute time frame around some economic release you really have no business in. I'm pretty good at learning from my mistakes, so I cut that out, relatively early on.
Yeah, and as Dan and I talked on the podcast last week about people trying to trade the Fed, is that those prices, whatever you're trading, is going to whip around in ways that may not make sense. And I was saying, it just anecdotally, I feel there's been so many Fed releases where it rips one way and then rips completely the other way. So it's really kind of a crapshoot that, especially since most of our traders in the combine are trading outrights, I think you'd have to be an absolute mad person to be putting on outrights through that. And before I kick it over to Dan, the only other thing I would throw out there about that is do what Mick said, and you always make your decisions based on what the market's giving you. Don't get too tied into a narrative one way or another, because even though you're going to hear a lot of talk about inflation now, I mean, the truth is there has not been a lot of money. There's been a lot of pain to those who have tried to speculate on rising inflation for the last, 40 years, 42 years or something like that. So I say this is coming. I used to trade treasury bonds, and it was always, am I going to pick the bottom sort of in this? No, you're probably not. But so don't become too tied to a narrative and let it overwhelm what you're seeing in the market.
Yeah. One thing I want to add to that too. I mean, you could be dead right on your direction. However, depending on your leverage, you might get shaken out. And, I talk to a lot of traders that are frustrated, when that happens. And, it's frustrating when you've got the idea right, but timing might not have been too great. Or if you're over leveraged and you hit your pain tolerance, I mean, that's always unfortunate.
Yeah. I get that gets popularized by, if you watch the Big Short movie or whatever with the survivor bias and stuff, where they show Michael Burry losing 20% a month or whatever, and then makes 500%. It's like, well, yeah, if he had gone in 2 months earlier, he would just be some jackass who lost all the investors' money, right? So it's tough. Timing's everything. So Dan, what do you got?
I got a lot I can say. Everyone's going to say
everyone
here saying they're not an economist. So I'll say I'm an economist. No, I'm not really. I don't disagree with anything said so far, waiting for the dust to settle. I think there's a lot of things we have to take into factor right now. John was kind of mentioning you can't really, just because you have an idea of what they may do, you can't speculate where it's going to go. Right now, inflation is all everyone's talking about, right? It's been the topic of conversation for an entire month. And yet we still see equities grinding higher, making new all-time highs. You saw the NASDAQ yesterday on a freaking tear. I mean, how, right? When you think fundamentally, how is that happening? We have inflation rising. We have this idea of the Fed tapering assets. They're going to start selling off some of what they have. That's going to bring everything down. Yet we still sit here and we're still buying. So to sit here and think that, well, no matter, if Jerome Powell comes out tomorrow and says, yeah, we're going to up raising rates to 2023. We're going to, continue our tapering. Inflation is now a very hot topic that we're going to be paying closer attention to. Yeah, we can say all of these things that fundamentally should say, bye bottom. Here we go. We're ripping lower. We can sit here and speculate that might happen, but it's proving right now that inflation's not a factor to retail investors and people getting into these markets, plain and simple.
Yet.
It seems like, too, there's the whole question about whether or not it's going to be transitory, which is, completely a new idea. In my entire lifetime, there was never you don't learn about transitory inflation in economics class or anywhere else because it hasn't really ever been a thing. And I'm not so sure it is a thing. We'll find out. But so even if they do start talking inflation, and Powell kind of tempers it with his whole I think it's transitory. This is from the pandemic. 10 months from now, we'll be back down to 2% CPI. So, those kinds of things are another angle where the market's looking at it. And they're like, yes, maybe all these markets should be breaking because inflation is coming, but are they going to buy this idea that it's transitory? And if so, is that going to help keep everything floating the way it is? So there's just so many ways it can.
There's a lot to think about. Mick used a prime example here, buying those windows. Prices have doubled. I've personally looked into the idea of possibly building and buying a property and building, and the cost per square foot is double. Now, We know why it's double right now. Costs of goods are increasing, supply chains, it's a little bit more difficult. There's a lot of factors involved, but I'm pretty confident in sitting here saying when life gets back to normal and goods are a little bit more prevalent, are we going to see those prices drop? You know,
And
you're seeing a
that
lot of these companies and these businesses and builders and suppliers, they're having record buyers come in, not even talking revenue numbers, because it's costing more to get those goods. But in 6 months from now, a year from now, are they going to go, you know what, let's go back to our prices pre-pandemic, and cut the revenues while people are still paying?
Yeah.
And that's where I think things are going to be interesting. I think it's really easy to go up in price for them. It's going to be really difficult for them to go right back to where we were. I've seen some great pictures floating around just about like stacks of lumber, excuse me. You know, you see a stack of lumber in 2019, what $1,000 would buy versus now. I mean, it's a visual mind boggle how little you're getting now for your money versus what you were getting a year ago.
Yeah. So sort of as they say in the Game of Thrones or whatever, words are wind. Inflation, people love to talk. Inflation is a religion in some ways that people give sacrifices to. What I'll be looking at is if it's transitory, it's because these supply chain disruptions and stuff like that. I'll be looking at wage growth, because that will be the real harbinger of inflation. I was reading this article on the quote, senior economist at Wells Fargo said businesses can talk until the cows come home that it's hard to find workers, but the Fed doesn't believe them until they've started to see wages rise. Mm-hmm. And where we sit right now with the best information, the price of the NASDAQ and where the yields are at, regardless of all the think pieces, it seems right now people are buying that this is transitory, but that could change. Like if I could snap, I would do it right there. But thank you, Dan. That's what I would be keeping an eye on. I think wage growth would really kind of mean that it's on. So
I'll tell you this, I'm actually in the midst of rehabbing a house right now. And like you said, everything is way more expensive than it, you know, a 2x4 used to be $2. Now it's $7. Everything. And everyone knows the lumber story, and, you know, supposedly that's topped out, but it's across the board. The plumber wants more money. The electrician wants more money. They can't get supplies. You can't get a roofer to come out and give you a new roof for 3 or 4 months because everybody's so booked up and busy with everything. And the prices of everything, like the windows, everything's up. And, you know, once a electrician, a plumber, and all the other guys get used to making X amount of dollars, I don't see how a year from now or 2 years from now, they're going to be like, well, my customers were willing to pay me X amount of dollars an hour a year ago. I'm just going to reduce my prices because inflation isn't here anymore. It's just, I think it's going to be pretty stubborn trying to get rid of any wage increases and everything else that's happening around us.
Yeah. And it kind of goes back, if people have taken some economic stuff, it goes back to kind of the basic, that's kind of how inflation gets out of control, where because wages are sticky and they are negotiated in advance for salaries and stuff like that, the expectations keep going higher, people demand more, then the expectations go even higher. And that's how you get into one of these cascading inflation disasters, which really it's been 40 plus years since that happened. So I don't know how many people are actually kind of ready for that or even know what that would look like.
Yeah.
It's a wild world we're living in. It's kind of Wild West. Like, you know, I think we all can sit here and speculate. Time will tell. It's going to be a very interesting next couple of years with everything going on. Rates as low as they are, you're seeing, you know, home prices, just the sale of a home skyrocketing. You know, people are making money in one side, but the people that are the ones spending the money, they're going to take those hits down the road. And how do we balance that out? And that's really nothing we can sit here and give our opinions on. That's, you know, the Fed's going to have to do something. There's going to be some sort of involvement, which I think, you know, circling back to tomorrow is why tomorrow is going to be a very, very interesting, not a number, but the conference afterwards, the terminology that Jerome Powell's using. We go back to when we started cutting rates, and we were, the term that just sticks out to me was this term hawkish. Hawkish was said so much, and that drove these markets wild. No changes, but they were using the term hawkish. What's going to come tomorrow? What's that term going to be tomorrow that's going to drive these markets in a direction? You know, speculating.
Exuberance.
Right. Speculation to me says it's got to start to sell eventually, but I can't sit here and say, hey, they're going to say enough tomorrow to ignite a sell-off. I can't say that. They're going to try and hold equity markets higher, but also give us this bad news of, hey, things are happening and we need to be prepared.
They're a lot more cautious now too with what they talk about. Alan Greenspan gave everybody a lesson on that.
Yes.
Mm-hmm.
I was going to say I have similar experiences trading the numbers or not trading the numbers, as I think everybody else here mentioned. But I'll tell you, there was one green report that came out, and I think it had been a very good couple of weeks leading up to this report. And I was making money and starting to believe, like, I know what I'm doing. I got this. And I went into a grain report number with a big position on. I think it was long futures, long volatility, long the skew, long everything. The number came out, it was very bullish, and volatility did go up, which it doesn't always. Sometimes they crush it after the number. So you can be long and market moves that way and you're still wrong. But I like hit it out of the park, and the risk manager called me up that night. He's like, Carol, I'm looking at your statement. Is this P&L right? Or is something wrong? Or is there a price that's mismarked? Like some deep in the money call that got punched wrong? I'm like, no, I think it's right. I had a really phenomenal day. And he's like, wow. And then we were trading limits. So everything was trading synthetically. So he was asking me, like some volatility questions just to try and pin down other people's P&Ls. Like, are these accurate? But easily the next few times I traded numbers, maybe not the ones right after those, but over my years of trading, definitely gave it all back. I mean, it was just a wild phenomenon that happened that one time.
Yeah.
Felt great. And sometimes, your emotions leading into these numbers when you are, not having such a great time, and you look at this as, this might be my opportunity to make all that money back that I lost all week. So you do put a position on, or you think you know more than the market and you go into a position because you've been making money and you feel like you're on some sort of a roll. But at the end of the day, it's just best to stand back, let the market do what it's going to do, and then see where you can find an opportunity to get in again, for sure.
Yeah. That's a great story. And it kind of goes to one thing I'm concerned about long-term is that with so many people jumping into retail trading in the last year, mostly from the buy side, on, options, stocks, all that, is they haven't really gotten a taste yet of what happens when it goes the other way quickly and violently. It kind of came in at the right time. So I hope everyone does well to manage their risk and just make sure you know what you have on and what the risk is involved.
Yeah, they'll learn. If it's not from listening, from their own experiences, like Carol just mentioned, we've all, kind of had those experiences on the releases, and, you can hear something and you might think that you're bigger than, other people's experiences, but everybody will learn when they're doing that.
Yeah.
It's funny. Where I came from, you did not miss a number. You were not sick on an FOMC. No. You were not sick on an unemployment. And I think one of the funniest things is when early in my father's career, he had a great unemployment and he was wearing a specific pair of pants that he recognized that morning he was putting him on. His entire career, he had his unemployment pants. Now, he gained a few pounds from beginning of his career to the end of the career. Still wore them every day. Every unemployment number, rattered and teared. We joked when he retired that we were going to get him framed and hung for him. And he was like, nope, they're hiding in the closet.
Just in case you got to strap back on like Superman. Yep. Yeah. Well, awesome stuff. Do we have any comments or anything to address, Dan, or do we want to move on here?
Just got a couple shout out to Greg and Norman. Norman, at what time do you recommend going flat tonight or tomorrow? I think just make sure you're flat before the number. You're going to start to see. You're going to start to see it. Look at the volume.
Yeah, you don't do it like a minute before, right? Like you could trade up to it, but like I would say probably an hour. I don't trade a lot of like outright futures like that, but the market will evaporate. It's not something where you can hold.
You're going to visually see it.
Yeah,
when it's time to get out.
Yeah, just keep an eye on your dome.
Yeah, but I do have some quotes. I read a few off earlier. There are some I'm just going to recommend everyone goes and search it, Google searches famous quotes about inflation and have a read, get a good chuckle.
Is this what you do for good times, Dan? You look up quotes about inflation?
I mean, there are some
Yeah.
very funny ones. Like I'll give a
Take the
quick
quote
one.
seriously.
A gentleman, Milton Friedman, inflation is like alcoholism. The good effects come first. But the one I'm going to go with here today comes from Will Rogers, and I like this one. Invest in inflation. It's the only thing going up.
There you go. All right. Well, I think that's where we'll cut it for today. Carol, thanks so much for joining us. It's been great to hear your stories about it. I'm kind of giddy for tomorrow, I gotta say, guys, because I just want something to happen.
Right.
I'm tired of
Anticipating.
anticipating and monkeying around with meme stocks. I need some red meat. Well, thanks all for showing up. Hogue, do you want to send us home?
Sure. Always manage your risk. And on FOMC day, liquidity dries up. It's very difficult to manage risk. When that number comes out, you're going to see your domes just kind of evaporate. All the bids and offers are going to get a lot smaller. There's going to be a lot fewer participants. A lot of folks they're just not going to play. And I'm one of them. And I think all of us are one of them. Don't hold anything into it. And protect yourself, man. That's part of the game. Yes, there's opportunity. FOMC, FOMO is real. Don't succumb to it. Trade well, everyone.
Couldn't have said it better. We'll see everyone next week. Keep an eye on the taper. Keep an eye on the date of possible rate rises. And have a good weekend otherwise. We'll see you later.